In this video I will be going over the closed trades from the 10th of June through the 8th of August. So since the last time we did the video blog, just a quick summary of how we've done for the year. So the swing trader for 2017, as of today, it's up about 80% per 15K traded. The S&P Crusher year to date is up about 40% per 30K traded. So I'll be going over the trades since the last blog I did and talking about the highlights of the last couple months. First, though, I'd like to go over the disclaimer. Alright, so Algorithmic Trading is we're what's called a third-party trading system developer. We're not registered commodity trading advisors. I recommend you pause this and you can read through the disclaimers, but just remember that past performance is not indicative of future performance, and that trading futures and options involves substantial risk of loss, and it's not appropriate for all investors. So with that, let me get into the results that we've seen since the last blog we did. Okay, so as a third-party developer, we offer two trading systems. We offer the Swing Trader, which trades on $15,000 increments, and also the S&P Crusher, which trades on $30,000 increments. And here's the breakdown for the year based on the month for each system. And so with the Crusher, so far it's up about 12K since January of this year. And so July we ended up closing out really well with a gain of about 2,588 in closed trades. And then June ended up being positive, and so far for August we're also up. So the first thing you might notice is on the Crusher, in closed trades it hasn't had a losing month yet this year, so it's been on a really good run. The Swing Trader has also done really well. It did have a losing month in March, but since we did the last blog early June, we closed out June really well. Also July up about 16K per 15 traded. And then August so far we're up for the month, and this is as of the 8th of August, which is today, and that's when I'm doing the blog. But let me go into the Swing Trader now and talk a little bit more in detail about how it's done and go over some of the trades. Alright, so I'd like to first point out the equity curve with the Swing Trader. And again, the Swing Trader trades two algorithms, the S&P E-mini momentum algorithm and the 10-year note. So the Swing Trader as a system is really trading two algorithms. Here's the equity curve for 2017, and you can see that we've had about 60 trades. The total profit has been 12,117 per 15K traded, and that's a percent gain for the year of 80.78%. So again, it's just done really well. The percent profitable is 81%, meaning for every for every 100 trades, about 81 have been profitable so far. The drawdown that we've seen this year, the biggest closing trade to closing trade, has been 1,961, and that occurred, I believe it was this drawdown right here, or it might have been this one. They both look real similar, but I'd recommend that you go to the website to look at the entire backtested period, and also, since we went live, what the max drawdown has been. But first, let me start going over some of the trades that we saw. Alright, so again, the Swing Trader trades two algorithms, the Momentum ES algorithm and the 10-year note. This chart right here is of the Momentum algorithm, so it's kind of one half of the swing trading system. And then this chart here is of the 10-year note, and it's kind of the other half. But let me zoom out of the chart so I can show you since the last blog, which was I believe it was June 4th that we did it. So it would have been kind of from this point backward we've already covered in the trading blogs or the review blogs. So what I'll do is I'll talk about the trades since then. But let me go back to this to the presentation. So I have each trade identified with the kind of trade it was. So the Swing Trade ES is the momentum algorithm, the entry, the exit, the commission slippage, and the protection is not used since this doesn't trade options, and then the final profit or loss on the trade. So let's start with the 13th of June, and I'll make this a little bit bigger so we can see it better. So again, this is the S&P E-minis, and beginning with the 13th of June, that's this trade right here. So this algorithm got into a trade and got out on the 13th with a profit, and then it had a losing trade right here, that's the red dotted line, that got out on the 15th. This trade right here was really good. It was on the 19th of June. We got in at about 2428.5, got out on the gap up at 2450. Then we got stopped out of a trade, had a winner, another winner right here, stopped out of another trade, then another winner, and then in the last couple weeks we've had basically 1, 2, 3, 4, 5, 6, 7, and then today we had our 8th winning trade in a row. So this momentum ES algorithm has done really well as the market has gone higher. We've had quite a few winning trades, and so let me go back to the trade list, and so you'll see on the 14th and also on the 19th, well, I guess on the 19th we had the swing trade ES, and that was a gain of $1,000. That would have been this trade right here. The other big trade was on the 10-year note, and I'll get to that when I talk about the 10-year note. But again, this algorithm, its purpose is to do well when the market either goes higher or sideways. The 10-year note algorithm, its purpose is to outperform when the market is going lower. And so let's talk about the 10-year note real quick. And so that's this algorithm here. And the last trade that we had, let me zoom out a little bit more, was back here on the 6th of January, and then we got out on the 12th of April. We jumped back in on the 19th of April. But because of the rollover with futures, we ended up getting out and then getting back in on a new contract. But technically we're still in this trade. But since we measure this on closed trade equity, we include the rollover that occurred right here on the 14th of June. But we are still in this trade. So and when we update this trade again for the whenever we do get out of it, we will show an entry of 127.16, the point that we sold. So the point is that with the rollover, we got out of this trade and booked a profit, but then we jumped right back in, and so that we're currently in that trade right now. But if you look at the original entry, which was back here, we are up on this trade right now. It's up a little bit. So anyway, again though, the purpose of the 10-year note algorithm is that when the S&P sells off, our hope and based on the data, more than likely the 10-year will rally, and hopefully that will offset any losses that we might see on the S&P algo. Or if this one is flat, then the 10-year note algorithm will hopefully have a gain. But so that's kind of the pseudo arbitrage that these algorithms are doing, where we might be long the S&P and then also long the 10-year during a sideways moving market. And if it's drifting higher, that might also be the case. But then when the S&P rolls over, usually the 10-year note will rally. And probably the last example of that, where we really had a big sell-off on the S&P and the 10-year rallied, was back in January of 2016 in this sequence. And if you've seen some of our blogs, you've probably seen me talk about this period a lot. But the point is that as the S&P was selling off back then, the 10-year rallied. So let me find the equivalent period on the S&P. It would have been right in here. So this is January 2016. As the S&P was selling off, the 10-year was going higher. And that's pretty important to understand what we mean by that, mainly because that's, I think, is one of the big reasons why we've been so successful, is the way that these two algorithms work together. Alright, so again, here's a summary of all the trades that we've seen, and I've kind of gone over the trades on the chart. So I think that's good for the swing trader. But to summarize, since the last blog we did back in early June, the swing trader is up an additional 12.5%, or about $2,200 per 15K traded. So again, this algorithm has done really well as the market has drifted sideways and kind of rallied in the last couple weeks. Alright, so let me talk about the crusher now. Alright, so the Crusher trades 7 algorithms. It trades the same 2 that we just looked at, the swing trade ES and the swing trade TY. It also trades the covered calls, the iron condor, the gap short, the day trade long, and the day trade short algorithm. So really what the Crusher does is it adds 2 options algorithms, the covered call and the iron condor, and then 3 day trade algorithms. And for the year, this algorithm is up about $12,058 per 30K traded, which is about 40%. It's at 179 trades, and the percent profitable has been 73%. The biggest drawdown about $3,200 in this period. And again, keep in mind, past performance is not indicative of future performance, but we do like to show our results so that people can get at least a basic idea of how we've done. And here's the equity curve for 2017 so far with the S&P Crusher. You can see an account, 30K account, is up to a little bit over 41K at this point. Alright, so let's talk about the trades that we've seen since the last blog that we did. And again, since this trades 7 algorithms, there's quite a few more trades. This algorithm has done a little bit better than the swing trader in the last couple months. But again, both have done really well. So this one is up about $3,800 per 30K traded, which is about 12, almost 13%. So let's look at the charts though, and I'll kind of walk you through the different trades that we saw. So again, I've already talked about the momentum algorithm when we looked at the swing trader. That's this one here, and again, that's the one that I just finished talking about. It's also traded in the Crusher. The 10-year note algorithm is also traded in the Crusher. I already talked about that. The covered calls is one of the algorithms that is traded in the Crusher that's not in the swing trader. So let me talk about that briefly. If you look at this chart, the momentum algorithm, you'll see these little yellow lines like C2460, C2445. What that's showing is the call that we shorted for the covered call algorithm. And so if you look at this chart, you'll see this trade was definitely a winner where we showed the 2460 calls. And so really what's happening there is the calls, if we're short the calls, then if the market goes lower, then we keep the premium on the call. And so that's really what we do. And if the S&P goes above the strike price by Friday's expiration, because again these are weekly calls, then we take a loss if it goes above the strike price plus whatever premium we collected. But basically what we want is the S&P to close kind of just below the strike price. So in this case, these calls were 100% profitable. These calls also were. This call here, the 2445, we might have taken a loss there, but let's go ahead and look at the spreadsheet, and we'll just kind of double check and make sure we're accurate. So this covered call was the first one I showed you, and it was profitable, 2435 strike. Actually, that would have been this one here. I'm sorry. So this one was the first one that we sold since the last blog we did, 2435. Let me go back to the PowerPoint. And it was profitable of $287. The next one was at the 2460, profitable at 140. And this shows the premium that we collected. So in this one it was 5.75 points, actually a decent amount on the calls. And then as the volatility started decreasing, we collected less premium in the trades after that. But 2.8 points on this call that we were short, 3.3 on this one for a gain of 165. This one here was the losing trade that we had, 2445 strike on 714 for a loss of 410. And so that was, if we go back to the chart, this one right here. So because it closed above our strike price, we took a loss on it. And then the next one was the 2465, and on that one we lost about only $61. So we took a loss, but not by a lot. And then some of the more recent ones, were winners with the 2480 strike, and then again on the 2480 strike another winner at 124. So that's how the covered calls work. But the idea is that it helps hedge against our long momentum algorithm. So if the long momentum algorithm is wrong and we buy the S&P and then the market goes lower, the short calls help offset any losses. But the drawback to it though, or the trade-off, is that if you get a strong rally and it goes above our strike price, then it nulls any gains that we would have seen on the long S&P. I know that's confusing, but you don't have to understand that really to trade the algorithms, but I like to try to go over them in as much detail as I can so that people understand what we're doing. But yeah, so in this case, so we've talked about the covered calls, the momentum ES, the treasury note. Let me talk about the iron condor now for since the last blog we did. Okay, so this middle chart is the iron condor, and it's the fourth algorithm that we trade in the crusher. So let me zoom out a little bit so we can get back to where kind of since the last time we did a blog. But the purpose of the iron condor is to outperform during sideways moving market conditions, and so with momentum traders or trend following algorithms, one of the most difficult parts or market conditions to trade is when the market goes sideways. So if the market is rallying strongly like it was here in kind of the last couple weeks, the trend following algorithms will usually do really well, kind of like our momentum ES algorithm. But when the market goes sideways like it did here, sometimes those algorithms will struggle. So that's where the iron condor can help. Because really what the iron condor is doing is we're selling a call and we're also selling a put. And the idea is to collect premium, and as long as the market closes kind of in between the call and the put, then you're 100% profitable on the iron condor. If it goes above the call or below the put, then you may take losses if the move is big enough to overwhelm the premium that you collected on the call and the put. So really, the way we use them is to help fill the gap of sideways moving market conditions. How do we kind of do our best to outperform in those conditions? And that's really the purpose of it. And it just so happens that this iron condor algorithm also does pretty well when the market's drifting higher. And that's, I think, because usually you'll collect quite a bit of premium on the puts, to where even if the market rallies, it has to rally above your call plus the premium on the puts plus the premium on the calls. So it gives you a pretty big buffer. But let's just look kind of quickly at some of the trades that we've seen with the iron condor. So the first one was on 6/16, so let's go back there. I guess we're looking at May right now. Alright, so here's the 16th, and so this would have been the first one that we did since the last blog. And you can see we sold the iron condor on the 12th, and it expired on Friday. So basically 4 days later, the market pretty much closed almost right in between, well, just above the call. So this trade, even though it closed above the call, it still should have been profitable. Let me just double check. So yeah, it's this trade here. So because we collected so much premium on the call and the put, we actually were profitable on both legs. So the call was profitable 177 and the put 312. Let's go to the next one on the 23rd, and that would have been this one here. So in this case, the market did move lower, but I'm not sure if it moved enough to make it a losing trade. I guess it did. So we lost 278 on the put, on the short put, but we made 140 on the short call. So the net loss on that would have been roughly $130. So really not a lot, but it was a loss. The next trade on the iron condor was also a loss, I believe, as was potentially the next one. So the iron condor, as the market rallied throughout here, it did take some losses, especially on, I believe, this trade right here and potentially this one. But the last few trades, as the market went sideways, the iron condor did really well, and it was 100% profitable on both legs. So again, none of this is really a surprise to us. If the market is going higher strongly like it did here, we can take a loss on the iron condor. But the key is, as a system, the crusher still did really well, and that's because the long S&P algorithm, the gains on it were way bigger than the losses on the short call on the iron condor and also the covered call. And then as the market goes sideways, the iron condor starts to outperform. And through here, the market really was going lower with some decent momentum. And so that's why I think these two were losing trades. But then before that, we had a couple winning trades. So that's kind of how this works. If the market goes sideways, usually the iron condor will do well. If it goes lower, it might struggle a bit. But if the market goes higher like it did here, it potentially struggles. And then as it goes sideways, it does well again. Now, if the market goes higher but not as strongly as it did here, then the iron condor will also be profitable, and it does have a positive expectation for up moving markets. Alright, so that's the iron condor. Let's talk about the 3 day trading algorithms now. Okay, so the crusher trades 3 day trading algorithms in addition to the other 4 algorithms that we've already talked about: the covered call, the momentum ES, the treasury 10-year, the iron condor, and it also trades these 3 day trading algorithms. This first one here is called the morning gap, and it's an algorithm that goes short the market when there's a gap up followed by some weakness. And so let me kind of zoom out and show you some of the trades it saw. So it did have a trade on the 4th of August where it went short and then got out at the close. So that was a winning trade, not by a lot, but still a winning trade. It also had a really good trade on the 27th where it went short and then got out when it hit its target, and then the market rallied towards the close. So this is probably the most ideal trade that this one has seen in this period. The fact that it had a target and got out was good. Otherwise, it would have had still a gain, but not as big of a gain. So it did the right thing. And then on the 27th of July, it also had a winning trade, and same on the 25th of July. So this algorithm actually traded quite a bit since the last blog, and the last 4 trades have been winners. So it's done really well. And those might be the only trades. I guess it did have one on the 14th of June as well, which was a winning trade. So in this period, since the last blog, this morning gap short algorithm has actually done really well. With I guess it's about maybe 5 winning trades in a row. If we go back here, you'll see those trades listed as, see if we can find it, day trade GS for gap short. So here's that first one, had a gain of 175. If we go down looking for the next one, right here with a gain of 50, and then the next day with a gain of 63, and then on the 27th, here's that bigger one that we had with a gain of 687, and then this last one, a gain of 37. So again, it's done really well. The other, and it's a short algorithm. It's designed to do well when the market's going lower. In this case, it actually did well, even though over the entire period the market went higher. And that's really because the kind of the volatility that happened within that kind of up move. And so that's kind of where these day trade algorithms help, is if there's a lot of volatility and you get some big moves either up or down, then they'll usually have some pretty good trades. This second day trade algorithm is the breakout algorithm. And it also has done pretty well since the last blog. We did get stopped out of a trade on the 4th of August, and we took a loss on the 25th. But then on the 19th, we had a really good trade, and also on the 14th. And so, again, as the market was going higher throughout that period a couple weeks ago, this breakout algorithm did really well, and it did exactly what it's supposed to do. And that is namely capture the big moves when they happen with strength in the morning, which usually those are the kind of moves that keep going higher. Not always, but that tends to be the pattern. And so on the 12th of July, I had a winning trade right here. a pretty big winning trade on the 14th, pretty big trade on the 19th, and then if we keep going back since the last blog, looks like we got stopped out of a trade on the 3rd, took a loss on the 26th, a winning trade on the 19th, and another winning trade on the 13th. So overall, I think this algorithm did really well, and you can see those trades if you look for day trade B3. So here's the first one, a gain of 138. The next one, a gain of 362. The next one, a loss of 362. And if we go through, you can look at them, a loss of 75, a gain of 300, loss of 350 right here. But overall, I think this algorithm was profitable in the entire period. Yeah, so let's look at the day trade short algorithm now. That's this one, and this is the last algorithm in the Crusher. And what you'll see is that it did have a winning trade on the 6th of July, but besides that, it really didn't trade. And I'd like to highlight that because if you can have 7 algorithms running concurrently, and there's no manual intervention, so no one goes in and says, oh, I don't think the market's going higher, so let's enable the short algorithms and disable the long algorithms. That's not what happens. These are always running, and they're looking at technical indicators to place the trades. So the fact that the short algorithm only had one trade as the market went higher is really good, because that means that it's doing exactly what it's programmed to do, and stay on the sideline when the market goes higher and let the other algorithms take over. But the fact that we did have a winning trade in the midst of that, of kind of the sell-off that we saw in this week is also really good. So overall, this algorithm has done well in the period, with only one losing trade. Alright, so to summarize the Crusher then, since the last blog, we've had quite a few trades actually, and it's up about 3,892, or about 12, almost 13%. And one thing I want to point out is, if you notice the gain of 3,892 in this period, let's compare that to the swing trader, had a gain of 2,216. So remember, the Crusher trades the same algorithms that's in the swing trader, those two momentum algorithms, plus the options algorithms, plus the day trades. And you can kind of do the math here and see that the swing trade, the Crusher is up an additional roughly $1,600, I guess. And so that additional gain of $1,600 came from the options algorithms and also the day trade algorithms. And I think in this case, the majority of that was really from the day trade algorithms, so that they really did do well, and they're kind of the highlight of this period on the Crusher. But on a percent basis, the Crusher and the swing trader really did about the same. And again, it's because the Crusher trades on $30,000 increments. Because it has more algorithms in it, it requires more in the account. So most of our customers have been leaning towards the swing trader, mainly because on a percent basis it's done so much better, up 80% versus the 40% on the Crusher. A lot of people ask, well, what's the point of having the Crusher, or are there any advantages to it? And my answer is, in my opinion, yes, there are some good things about the Crusher that make it something that people should potentially consider. The biggest advantage is that because it trades 7 algorithms, it does kind of distribute the risk a little bit more. And in the back testing and in the walk forward and in what we've seen in live trades so far, it does seem to do a little bit better in sideways moving markets. And so if somebody has a larger account and they want to, and maybe they're more concerned about drawdown, or they want to protect a little bit more, but they still want to have an aggressive algorithm that's really taking shots at the market, then the Crusher could be a really good one to consider. But again, we're not registered commodity trading advisors. We don't give investment advice. So I recommend that you would talk to a CTA, a registered commodity trading advisor, if you need questions answered specific for your unique situation. But if you have questions about the algorithms and just their performance in general, then please don't hesitate to reach out to us. And with that, I think I'll just close with highlighting maybe a few additions to the website that we've kind of recently added, and then I'll close. Okay, so on the website we recently added a few pages. So the first one is this reviews and press, and I recommend anyone that is doing their due diligence on us, you can look at this page and see a few of the reviews that we've had. So we're certified as Trades Our Own Strategy, A+ rated on the BBB. We did have a blogger named Emmett Moore, actually almost a couple years ago, that did a review on us and gave us 4.7 out of 5 stars. And his reviews usually are pretty brutal towards trading system developers or people that are doing the kind of work that we're doing. So the fact that we got a good review from him was really positive, and we're very proud of that. We're also Ripoff Report verified, where the people from the Ripoff Report actually came out to our Boise kind of virtual office that we have out there, and they interviewed me and talked to me, and then did a write-up on us. We have a A+ rating on the BBB, 26 positive reviews with only 1 negative, and then there's been some press releases that we've done and got picked up in Yahoo Finance. But the other thing I'd like to show you is this statements page that we have. So we do get requests from people just asking if we have statements that kind of demonstrate kind of the results that we've been seeing. And so we created this page to kind of show a couple accounts that are trading. One is trading the swing trader and one's on the crusher. You can actually download the statements here. The one thing I'd mention though is that the statements, because they're live accounts from people actually trading these algorithms, they can be a little bit messy at times. So for example, this crusher statement, he withdrew 20K out of the account, and in the statements you can actually see that money coming out. Here he withdrew another 10K and then transferred 40K into this account where he started on the swing trader, and then took out another 10K in March. So it can get a little tricky when you're just looking at the net liquidating value of the account, because you have to account for those. So that's why we have the FAQ to help kind of walk you through the statements, because they can be kind of painful to look at. But if you are looking at them, and that's my phone, then I recommend that you, the easiest way to do it is just to you can look at the statement like I'm doing here, and then go to the bottom where you'll see the net liquidating value. So that shows the value of the account if it was closed and the money was just taken out. And using that, you can kind of track the month-to-month performance. That way you don't have to look at every trade and try to figure out exactly what was going on. But if you have the time or you're bored and you want to do that, by all means you can. We do have all the data here. So I think with that I'll close. Thank you very much for watching this video blog. I know I tend to ramble on, and if you made it this far, then I'm impressed for sure. But we did have a great couple months since the last blog we did, and have really high expectations for the algorithms moving forward. Would love to have you reach out to us. So if you have an interest, you can give us a call at 866-759-6546. You can send us an email. You can fill out one of the Contact Us forms on the website. I'd be happy to give you a demo where I can share my screen and answer any questions and walk through the trades, kind of like I do in this video blogs. With that, thank you very much for watching, and I hope you have a great day, and best of luck to you in your trading. All right, have a great day. Bye.